I'm so excited to be here. My name, as mentioned, was Allegra Stennett. I will be your moderator for today's panel entitled Sources of Capital to Fund Your Startup Other Than Venture Capital. So I am a second year MBA at MIT Sloan. I'm an entrepreneur and a proud New Yorker. Prior to grad school, I was a banker in JP Morgan's investment and commercial banks. So I just want to give a warm welcome to our distinguished panelists. It's an honor to have you. So before we start, we'll just do some brief introductions so that we can maximize the time for our discussion. So please tell us your name, your company title, and how your organization funds business owners. So we'll start with Caitlin and then we'll move to Robert.
Hi, everyone. Thanks for having me, Allegra. My name is Szikszai, and I am a senior investment team associate at Republic. Republic is a fintech platform that helps founders across, a lot of the early stage raise from accredited and non-accredited investors. I'd say for the most part, startups are bread and butter, but we also work with real estate companies, crypto companies, and help with tokenization and different things like that. So we have a pretty wide spread across the industry.
Definitely. Thank you for that, Caitlin. And Robert, over to you.
Good morning. Good morning. Certainly a pleasure to see you. So I'm Robert Hines. I am a South Region area manager for JP Morgan Chase. My business unit focuses specifically on minority entrepreneurs and assisting them with access to capital.
Thank you, Robert. So Caitlin, we'll start with you. Can you tell us a little bit about what Republic is and what equity crowdfunding is in general?
Yeah, absolutely. So Republic is a fintech platform, and really we sit nicely in between founders who are raising capital and then also our investor base that we've curated and built up over the 6 years that we've been around. We help founders raise across a few different security exemptions. We have the capability to do Reg D, Reg CF, and Reg A raises. I really think, here it's most helpful to zoom in on Reg CF. So regulation crowdfunding is also shortened as Reg CF, and a lot of people know it as equity crowdfunding. Pretty much it was a security exemption that came about in 2016, passed by the SEC, allowing for companies to raise capital from accredited and non-accredited investors. So this is a really special security exemption just because for the longest time, non-accredited investors didn't have the ability to participate in these private fundraisers for companies. So it largely widened the audience of people that founders could raise from. And there's a few specific platforms out there that have been given and granted the ability to help companies run these Reg CF campaigns and execute them. Republic is one of them. So when it comes to our platform, pretty much is we help companies put up these campaigns, which allows for them to raise from their communities, family and friends, and then also our community as well. You have the flexibility of setting the minimum investment size of where you want it to be. So believe it or not, you're really able to grab investments from people at as little as $50 if you wanted to. This greatly lowers the barrier of entry for people who want to get into private investing with different startups. And it just also allows the ability to connect with your community on a different level instead of having your investors needing to meet a minimum check size. I think at the end of the day, really what we're looking to do as a platform is to democratize the ability for individuals to invest into all sorts of opportunities, especially early stage startups. And then on the flip side, also allow for founders to raise from all sorts of people and really diversify their investor base. And also have access to more capital. I think that traditional VC can be a little bit narrow-minded. And so platforms like Republic really strive to offer different opportunities and alternatives to founders who are looking for funding.
Thank you for that, and definitely see that how that's democratizing access to funding. So just for our attendees here that are listening, this essentially means that my cousin can invest in a company or my mom or my aunt. It doesn't have to be a traditional VC. So that's fantastic. So tell us, what is the right time for a business to consider equity crowdfunding? When do I know it's the right time?
Yeah, that's a great question. So we have raised campaigns with companies all across the board. I would say pre-seed all the way up to Series A, for the most part, is the range that we're looking at. But I often do recommend for companies to have their business outlined a little bit, and oftentimes have their product in market, just because of the fact if when your product is in market, you probably have a community of users or customers or people just generally that know about your company and your brand. And because of this, you're really able to grab access from them and bring them in as investors. I think really the cool part about allowing for your customers or your users or just general fan and communities to become investors is the fact that when you give people a financial incentive into a company, they're less likely to go to a competitor. They're more likely to support your company and champion in other outside conversations that you're in. So I think it really allows for companies to bring on a lot of natural evangelists. And so the wider of people in your community that you're able to pull from, I think the more opportunity you have to A, raise a larger amount of capital, but then B, also just create a deeper bond with and a multiplied impact with these people as well.
Yeah. Makes sense. So say I'm an entrepreneur, I have a business, we've already launched, so I have some customers going. What's the process now of getting on Republic? So how long does it take? How much does it cost? Tell me about due diligence. What's the overall process like?
Yeah, definitely. So when it comes to Republic specifically, and I think other platforms in general, we do have a light amount of due diligence, but I wouldn't say that it's as intensive as if you were going down the institutional capital route. At the end of the day, the way that I like to think about it is that I'm sitting between companies and our investor base. So of course, we want to make sure that we are putting a diverse offering of companies in front of them, and also sound companies in front of our investor base. So when we're doing due diligence, it's often time to, just ensure that the company is going to fit within the scope of verticals that our investors are interested in, but it's not too intensive. I have a due diligence team that, looks at a quick report of the company and also just takes a look at the financial health of the company to make sure that it's a sound opportunity. But really, companies are able to apply through our website. We live on Republic, REPUBLIC.com. And if you go there, it's pretty easy to see where you're able to apply. People send in an application, oftentimes including a little bit about themselves and a pitch deck if they have one applicable. And then someone from my team gets in contact with them. We often do have to focus a lot on education for founders at the beginning of the part, because Reg CF is definitely an idea that's been around for a few years, but it's growing exponentially year over year. And there's still a lot of education and misconceptions that come around with it. So, we really do focus a lot on the educational process of it. But ultimately, if we find that we're a good fit for the company and the company also feels that we're a good fit for them in terms of their fundraising journey, we'll go through a quick onboarding phase. It does take a little bit of time because the SEC has put in some compliance requirements there. So, there's a level of financial review that a company goes through. And then also there's a form called a Form C, which is a disclosure form that the SEC asks for that really just specs out what the company's raise is going to look like on our platform. So valuation, instrument, minimum and maximum size, things like that. Those things get done at the very beginning. Oftentimes you're working with a third-party CPA and attorney. So the only upfront cost would really go towards them for covering their services. I want to say it's about $5,000 for the most part, what we've been hearing in terms of founder feedback to get that front work done. Once it's done, though, your campaign will launch and go live, and it really is live for quite a bit of time. I would say the sweet spot is anywhere between 2 and 4 months. During this time, of course, momentum's being built up into a campaign, but also another way that I would think about it is, it's almost like a marketing campaign at the same time. We have about 1.5 million members on our platform. And so your company is really going to have visibility in front of hundreds of thousands of new eyes. They're able to dig into your business, not only to see if it's a good investment, but we're also hoping that they're clicking through to your website. They're getting an understanding of your product and really learning what you're doing as well. So it is up for a longer amount of time. It's good to note that it's very flexible. So you're able to draw down funds while the campaign is live to a certain extent. You're also able to privately fundraise as well. So it really shouldn't come into conflict with any of the other fundraising plans that you have. When it comes to fundraising on a Reg CF platform, it is mutually exclusive to the platform, but you are able to do any other private fundraising. It just means that you can't have another crowdfunding round through Reg CF going on in another area or with another company there. So that's that. But otherwise, you close out your campaign, and you'll have 1,000+ new fans that are part of your community there. Really, I think the overarching thing that's really important to consider is that we have worked hard over time to build out a product that wouldn't deter a founder from wanting to bring on more investors. So pretty much what I mean by this is that we really have worked to make sure that cap table management is organized. So all of the investors are represented as a single line item on the cap table in summary. Individually, they don't have voting or information rights, nor is your personal information given out. So we have a communications product that you can talk to your investors, pass along updates, and communicate there, and possibly build relationships. But you will not be feeling like you're bringing on a big amount of people that you have to manage personally. You can almost think of them being represented as one in a way by our product and our company.
Thank you for that. So just to double click on that a little bit, starting out, so day one, I'm registering for Republic to the first day of my campaign. On average, how long is that time period?
Yeah, I want to say it's about 1.5 to 2 months. There's obviously the beginning conversations, about like a week and a half of the beginning conversations and due diligence, and then plus the 45 days of the onboarding that it takes to get everything prepped to launch a campaign and have it go live. I think naturally, though, the way that conversations often go, in my day-to-day when I'm chatting to founders, of course, fundraising can be tricky to time, and it's also very dynamic as well. So sometimes I'll talk to founders and we'll chat and move through diligence, or choose to maybe go at a little bit of a slower pace. So I think that relationships can kind of be like shortened and lengthened. We're really happy to go off of the pace that's best fit for you. So sometimes I chat to a founder, they're still settling their lead investor for their round, or they're still figuring out terms and how they might want to move forward. And it's just a continuous relationship of checking in, kind of seeing it's the right time to get things started. And then when they're ready, making sure that they're able to onboard swiftly and then launch in their campaign when they would like. But I would say nothing's forced, and really it's pretty flexible and up to the founder of how they'd like to proceed.
Great, thank you for that. So we want to set up our entrepreneurs here for success. So can you tell us the most common reason that a campaign is rejected or that it fails on Republic?
Yeah, so I think that when it comes to first, the classifications of companies that we usually start to work with, we usually like to see a little bit of a product market fit. So often this means being in the market for a few months, being able to show traction points, whether it be user-based or revenue-based, and then also growth rates to support. So oftentimes I will chat to companies, and it might be a little bit too early, say because they are looking for funding for the build phase of their product. So I would say, once a company's gone to market and is able to show some traction in terms of users or revenue, that's usually when I would see it being a good fit for Republic. Now, in terms of campaign success on the platform, I think the reason why we have our due diligence process in the way it is to ensure that companies will be successful. We have a pretty good idea of what our investor base is reactive to, and so we actively make our decisions when allowing for companies to come onto the platform based off of, what we know in how companies can perform well on our platform. So we really do try to make sure that each company that's on our platform is going to be applicable to our investor base. Once a company goes live, we do support in terms of marketing in front of our investor base for all companies that come onto the platform, as long as they pass an initial benchmark. So we do ask for companies to help seed the first amount of the campaign from their community. And once they pass this certain point, that's when we kick off our marketing. So we do a lot of focused email marketing towards our, the investor base that we feel is applicable to the company. We do social posts, and we also seek for outside press and media opportunities for these companies to participate in and speak on their campaign about. So we find that really, because we have this baked in marketing support with our campaigns, that majority of campaigns on our platform are successful. And then furthermore, to just give a little bit more insight about how the Reg CF industry is kind of set up and what the standard of practice is that companies usually set their goals quite broadly. It is not like you set one goal and that you need to hit it in order for you to have a successful campaign or close on capital. So most companies usually set their goals pretty broadly. They're setting their minimums at numbers around 25,000, and then they usually set their maximums at the number of the level of disclosure that they want to give with their financials. So I think if you go to majority of crowdfunding platforms, and especially Republic, you'll see that it's usually a range of 25,000 and then $1,070,000, and companies will fall somewhere in between. So as long as you pass that $25,000, you'll be able to close on capital, and you can deem your campaign successful there. So our success rate has been very, very high. I think largely because we pay a lot of focus towards the diligence that we do with companies and just making sure that they're a good fit for the platform. But I want to say, our average in terms of our success rate in terms of percentage is around 95% of companies closing on capital when they come onto our platform.
Fantastic. So can you tell us a little bit about what happens when a campaign closes successfully? So are entrepreneurs going out to VC after that for the next round? Are they coming back to Republic to raise? Tell us a little bit about the after action process.
Yeah, it really is all of the above. I think I just kind of set the stage there. I think that crowdfunding and equity crowdfunding, we never like to think of ourselves as a replacement to VC or institutional capital. We like to think of ourselves as an additive. When it comes to the capital that you're bringing on as a founder, there is always going to be different reasons and different benefits to bringing on certain types of capital. For example, if you are bringing on an angel investor, oftentimes you want to bring in someone who is well-versed in your industry or an area that you might want to move into and just want a little bit more expertise on. So having them for advising purposes can be very helpful. When it comes to Reg CF and equity crowdfunding, really what I see the benefit being is the marketing, the visibility, and the community tooling that it offers you. So when a campaign closes successfully on a platform, oftentimes, there's been many cases, we've had dozens of companies come back and run second campaigns. I do think it's very common and very natural for a company to go and raise financing from VCs and institutional capital after, especially since we're working with companies at the early stage. Although we haven't had many exit examples, in our portfolio, just because we've been around only for a few years now, and the largest amount of companies that have come through our platform have really come through in the past year or so. We are able to see positive validation of the companies in our portfolio by the follow-on funding that they've raised. We have 200 plus VCs as co-investors in our portfolio. And within the last year, we had 2 companies, raise part of their seeds on Republic and then go on to raise their Series A led by Andreessen Horowitz. So we've had a lot of really great signaling that's shown validation to the companies that are on our platform, and just also the trajectory that they have moving forward as well.
Thank you for that. So just tell me a little bit about diversity on the platform. So as of last week, I believe there are about 7 self-identified Black founders and about 5 Latinx founders. And these numbers, relative to what we know about the general entrepreneurship community, they seem a bit low. So can you tell us, how do we improve these numbers? And does Republic have specific goals around Black and Latinx founders on the platform?
Yeah, no, that's definitely a good observation. I would say that when it comes to crowdfunding, of course, we want to make sure that we are providing founders, lots of opportunity. And then also just our investors, the ability to invest into all sorts of founders and kind of have those people be representative of the overall entrepreneurship ecosystem. And then also just of like the landscape of the US and around the world as well. I definitely think that when it comes to funding and across all of the VC industry, there is a lot of disparity in terms of what the actual makeup of our nation is and what the makeup of entrepreneurships in our nation is, and the people who receive funding. I think it's something that everyone should actively think about, and especially as a platform, that is something that we do as well. We've had many initiatives over the years that we've used to try to combat and really make sure that we're bringing in more underrepresented founders, whether they be female founders or founders of color. Something that we did recently that I found really motivating and I think went pretty nicely was the fact that we brought on a small accelerator program called Rise with Republic. It focused on educating founders about different sources of capital, also helping them pitch and just how to present themselves generally when it comes to fundraising. I think oftentimes it is the lack of education of the opportunity that's out there and really making sure that every founder is ready to get up to bat to fundraise. So Rise with Republic was a quick program that we did this year. We had a first cohort of about 33 members. And, I'm proud to say that 50% of those people identified as people of color. So I think that really helping founders feel confident in fundraising. I think sometimes a deterrent, on our platform can just be like the initial traction that we do look for in companies before they come onto the platform. And so, helping companies at the earlier stages get prepped for funding, I think can be a really good way to ensure that they're ready to come onto a platform like Republic and really utilize the community that we have.
Great. Thank you, Caitlin. So we want to welcome back Robert into the conversation and also introduce Natalie. So Natalie, thank you for being here. Just want to briefly give you a moment to introduce yourself. Tell us the company you work for, your title, and how your organization helps to fund business owners.
Sure. I'm glad to be here. My name is Natalie Cofield. I'm the Assistant Administrator at the U.S. Small Business Administration, and I lead the Office of Women's Business Ownership more specifically. And our office is responsible for distributing $70 million in funds directly to nonprofit organizations across the country to establish and run women's business centers. And so we now have the largest women's business center network in the history of SBA, with 141 women's business centers across the country. And as of last month, we actually were very excited about also making another historical announcement, which is having a women's business center in every state in the country. And so our women's business centers work with entrepreneurs in their community to support them through connections, through training, through technical assistance, access to capital, and access to contract assistance. So that's what I do at SBA. And then I think, just in general, the Small Business Administration, particularly during this time, has become really very important to Main Street businesses across the country, either through disaster recovery initiatives that we have implemented to save millions of small businesses, or through some of our more 365 programs that we have, like our traditional lending initiatives that we do with our network of nearly 5,000 banks across the country.
Great, thank you for that. So just a brief question for you, actually, Natalie, speaking about what you just mentioned. Tell us, as a woman, so say I walk into this center, what can I expect? And what services are there specifically for me?
Sure. It depends on what center you walk into, which one of the 141 you go to. But all of our centers have ongoing entrepreneurial training programs. They do workshops, they do accelerator programs. You also should be able to expect to walk in and receive one-on-one advisory services and counseling for free from a business advisor. You should also be able to receive assistance in putting your contract bid together with someone at the Women's Business Center, or preparing your documentation for a small business loan. Now, we do have within our network of 141 centers, we do have about 30 of them are CDFIs, Community Development Financial Institutions. And so what you also may be able to do is go in and actually receive capital directly from the host organization as well, through their micro lending programs. But not all of our women's business centers are also CDFIs. So again, it depends on which one you go to, but all of them should be prepared and are prepared to support you with establishing your business plan, preparing yourself for funding, and also preparing yourself for contracting opportunities.
Thank you for that. And Robert, you're at Chase. I know a bit about Chase, used to work there, but wanted to know, tell us in your words, how is Chase helping to close the funding gap for BIPOC businesses?
Well, back in October of 2020, we made a commitment, a $30 billion commitment over the course of the next 5 years to assist in advancing racial equity. And we built this commitment around 4 pillars. One, affordable housing. Second would be minority entrepreneurship. Third, financial literacy. And then fourth, diversity, equity, and inclusion. My segment focuses specifically on minority entrepreneurship. And in this segment, what we have done that I think is very unique compared to some of the other financial institutions is we've actually provided human resources to support minority entrepreneurs, as opposed to just writing a check and hoping that those dollars would solve the issue. So our group focuses on access to capital. And when I refer to capital, it goes beyond just a monetary component. You're looking at intellectual capital, which is what business owners need to know in an effort to get their business from where it is to where it deserves to be. The other component would be social capital. Those are the people, that's the team of trusted advisors that you should be building around you to help you do the things that you can't necessarily do yourself. And then finally, there's monetary capital. Those are the dollars that's going to help you execute against the goal. And we do this through one-on-one coaching and mentorship. And the idea is really to get an appreciation for what the business owner wants to accomplish, and then help rally around this through putting together a customized program or solution, if you will, to help them achieve the goals that they want to achieve as a business owner. So that's the commitment that we've made. And we have this footprint across the country, and it's continuing to expand. I mean, we started in 13 cities, then 26 cities, and this year it'll be 30 cities. So we're really excited about the growth, but more importantly, the impact that we're making inside of this community.
Definitely. Thank you for that. To Natalie, to many entrepreneurs and business owners, the SBA can be intimidating. So can you tell us about a few steps the organization is taking to make the SBA an easier consideration for funding and support?
Sure. So a couple of things. One, I mentioned our Women's Business Center network. But in addition to that, we have 1,000 other resource partners, either through our SCORE chapters, the Service Corps Retired Executives, which provide one-on-one mentorship, or our SBDC network, or our, which is the Small Business Development Center network, or our Veteran Business Centers, which are our VBOCs. And so I would encourage folks to go to the SBA website, sba.gov, and look in the local SBA assistance and find a center. These are not the SBA. They are nonprofit organizations and external partners that work with the SBA and work with small businesses to do exactly what you just mentioned, Allegra, make small business owners more aware of and support them through the process of understanding how to navigate some of the programs that SBA does have. Now, the next thing I'll say, and having been an entrepreneur myself, I actually came to this role from having my own business for 12 years. There are some things that small business owners are just going to need to do. When you're ready to apply for college, we don't change the terms and conditions of how you apply for school. You have an application, and you know you're going to have to take certain tests. You know you're going to have your your documentation in order, and you're going to have an essay. No, I wish I could say that we would be removing any of the required documentation that's necessary for access to be certified or to receive a loan, but we need that for compliance on all fronts and protection of the program and the protection of the grant of the fundee. And the banks ask the exact same questions. So I don't want people to be in the thought that SBA is asking you anything that's more egregious than what the bank will ask you. And in fact, as I mentioned, our network of 5,000 banks across the country that are intermediaries for our SBA lending portfolio and products, 7A, 504, and other initiatives that we have through our Office of Capital Access, they also have to be in compliance. So I wish that I could say that we have to, or we're going to change the terms, but we need to do this to protect the integrity of the programs and to protect the small businesses. But one thing I will say as a former owner, as I just said, is that you have to just have these things together. Your financial statements are your financial statements. And whether you're going to get certified or you're going for a bank loan, you just need to have them. Your incorporation documents are your incorporation documents, and you just need to have them. Now, this is where the centers can come into play to support you getting your documents together, almost like, again, finishing your college application. You want to be able to talk to someone about that so that when you do submit it to SBA or to your school of choosing, and they are now reviewing it, you've had an opportunity to review it with someone else first. And that's where our extensive network of resource partners come into play. But again, I just encourage folks to think of this like applying for school. There are universal requirements that will be needed by every university that you would consider.
Thank you for that, Natalie. And we definitely know that sometimes, to your point, that these requirements help entrepreneurs themselves feel more confident in the process. So thank you for that. So to Robert, if I walk into a Chase Bank, I'm a 20 or 30-year-old entrepreneur. I've been in business for, say, about 6 months with little revenue. What options do I have to get funding? And what would you tell me to do?
Well, my first thing is to help you create this mindset around crawl, then walk, then run, right? For most startups or most new entrepreneurs, one of the things that we want to help them gain an appreciation for is the importance of credit. And let us not forget, credit is short for credibility. So just like credibility takes time, so does actual credit. And that is so key. So the first thing is really around creating a plan. Something as simple as a business credit card is a easy point of entry, and then you work your way into a loan. I love what Natalie said. I mean, the reality is the SBA is your friend. As one of the 5,000 banks that utilizes SBA as a partner, they are also a partner to you. And the SBA helps mitigate some of the risk associated with new businesses, startup businesses, or businesses that have had a fairly rough start. They are your partner, and we also partner with them. And then, the last thing I would say, and again, this is part of the mindset, is that, money only solves the problems that not having money creates. So sometimes we have small business owners come to us and they're like, hey, we need a line of credit, or we need access to capital because we want to do this, or we're experiencing this. And the reality is it might be your business model that needs to help, not cash. That's not going to help you, because the same problem that you got into with lack of cash is the same problem you're going to continue to have with it. So it's really just around helping this entrepreneur understand that there's an infrastructure that needs to be developed, and we can help develop that infrastructure with them.
Thank you for that. So just want to bring back Caitlin into this conversation briefly. So Caitlin, I'm just curious to know, how often is it that entrepreneurs on Republic have an SBA loan or have a traditional bank loan as their prior source of capital, or will do so after a funding round on the platform?
Yeah, that's a good question. Honestly, I feel like it's not too often that I'll see companies with outstanding loans come through the platform. I think oftentimes these companies are going through the equity financing route and kind of just continue along that timeline. But I will say that any company that is like physical asset heavy, whether that be they are building out hardware or need a lot of machinery, oftentimes those are the times that I see grants and loans come into play.
Great. Thank you for that. So Natalie, what trends are you seeing from your position when it comes to BIPOC women founders receiving funds from the SBA? I think you're on mute there.
I'll answer this question in the way that I can. We are very excited about the fact that we are seeing the fastest growth of women entrepreneurs in history. And it's happening across the board. Women are the fastest growing entrepreneurial segment in the country. And even after the pandemic, women are starting businesses at 30% higher rates than they were before the pandemic, which to me demonstrates the entrepreneurial prowess of women and our desire to continue to make a difference for ourselves and for our families. Among those, Black women are the fastest growing entrepreneurial demographic within the broader context of the 12 million women-owned small businesses that we work with. SBA this year, I worked on a program when the American Rescue Plan was funded that established a $100 million program called Community Navigators. One of the things that we learned from the first round of PPP and disaster recovery relief funds was how many communities across the country still had not engaged with SBA or where we could have gone deeper. And so we established this program that funded 500 organizations across the nation, including the U.S. Black Chamber and the National Urban League. And the goal of this was to be able to provide funding support to not only the hub, but also spokes so that they were able to engage small businesses where they were and bring them into our national network of about 1,000, as I mentioned, resource partners across the country. Through their engagement directly with small businesses, the aim is to increase the access to capital and access to contracting opportunities that women small business owners have. As it relates to our deployment of resources and funds to small businesses, Black women entrepreneurs, I will say when we released the funding for PPP, nearly 96% of that in this second draw went to small businesses with 20 or fewer employees. When we released our restaurant revitalization fund, which was nearly $16 billion to support restaurants, which we also know Black entrepreneurs are also in the food service and service industries at higher rates. We had an entire period where there were 3 weeks where we made available these funds to underrepresented communities so that they actually had the ability to compete for these funds. Now, we were able to distribute this money out in a more equitable way than what we saw the first go round. But I think part of this is just about continuing to ensure that folks are aware of what SBA has to offer and of what SBA's resource providers and our network of financial services industries have to offer as well. And then lastly, I'll just say for my office, we doubled the number of women's business centers at HBCUs. We also have recently just put out a $1.5 million funding opportunity to support the establishment of 10 women's business centers on minority serving institution campuses. So that's the best way, Allegra, that I can answer that question without being able to give you an exact dollar data amount on how many funds have gone to Black women entrepreneurs.
Thank you for that. Love it. So Robert, what are some special things about Chase that we wouldn't expect in terms of how the bank helps entrepreneurs get access to capital?
You know, most people see banks as just transactional institutions, you know, where you can walk in, either withdraw money or deposit money, and there's so much more to it. You know, number one, I mean, we provide white papers and industry briefs. A lot of entrepreneurs have no idea that we do that. And that's the intellectual capital that can kind of help support your movement as an entrepreneur. The other thing is we're a team of really, really smart people, right? You have a team of experts inside of an organization like JP Morgan. Whether you're a startup in your garage or you plan to take your company public, we have the resources to assist you. And more importantly, we have the human capital to support you in an endeavor like that. So we're the type of network that you should include inside of your social capital. And the beautiful piece of this is, for the most part, we're free, right? When you think of social capital, you might think of an attorney to help you support your legal components. You might think of a CPA who helps you with your financials. You might think of someone in risk mitigation to help you properly insure yourself. You always have to include your banker because they can help you navigate that component of your business. They're complements to everyone. So I would definitely consider that as one of our advantages. And then I'll go back to something, Natalie described earlier, which are CDFIs and MDIs. Community financial development institutions and minority deposit institutions, we partner with them. So that partnership is really around, hey, if what you're doing at this time doesn't necessarily fit inside of our credit box, we partner with other organizations that can support the movement that you're trying to make. So those are just some of the things I would consider as part of a JP Morgan family.
Thank you for that. And Caitlin, can you tell us a little bit more about the Rise with Republic program? It seems like it was very successful, particularly on the BIPOC lens. So what's the future state of that program and how can our attendees listening potentially be a part of that?
Yeah, definitely. So I would say really Rise with the Republic was pretty amazing because we partnered with Jenny Fielding. She was the managing director at New York Techstars for a very long time. And when she actually did end up parting ways with Techstars, the first stop she came to was Republic and helped us build out this program. I will say that in comparison to other accelerators that are pretty traditional for startups, it was definitely a little bit of a lower intensity. It was a shorter 10-week program. And then additionally, it's not something that you are in and putting 40 hours a week towards. So it's pretty supplemental. And I would say that we are definitely we definitely are planning on running more cohorts for Rise with the Republic in the future. The first one went especially well. And we are looking to really structure out and be able to do this pretty consistently going forward. I think the best way to keep up with it, just because we don't have a specific date set for the next cohort, is to just follow along with Republic's socials, looking at Republic on LinkedIn and then also join Republic on Twitter. We're consistently posting about different opportunities that we host. So along with that quick accelerated program, we also host events all over the nation, along with webinars and different sessions for founders to really learn from. So I think that can definitely be a great way to keep up with what we're doing, and then also just like what's happening within the equity crowdfunding and Reg CF industry as well.
Thank you for that. And Natalie, a question for you is about the SBIR and STTR programs. So our understanding is that BIPOC communities are not taking advantage of these programs as much as they could. So can you tell us what these programs are and how can our communities access them?
Sure. So the SBIR and STTR programs are really research programs where across the board, all federal government agencies put aside anywhere from 3 to 5% of their federal budget to support innovation research. And that includes everything from the Department of Defense to housing and urban development to everything. And so in that, they fund small businesses and innovative startups that are doing both research, which is the SBIR, or technology transfer, and that's the STTR. And so we actually right now have a call for small businesses I would go to, again, SBA and put in our national STTR call for small businesses, because we're doing, through Bailey DeVries, who's the associate administrator at OII, a national competition for small businesses to be able to make themselves more aware of the program, but also to allow for the government agencies to become more aware of the small businesses that are interested in being able to be funded by their investment and research funds that they have. So I would encourage folks to, again, go to sba.gov and learn more about the STTR and BIR program that we are doing right now with our inaugural national competition happening across the country. But just in summation, Allegra, I'll say there are a number of programs. As Robert mentioned, SBA is your friend. It's here to assist you. That we're the Small Business Administration, and we're the only agency that's focused exclusively on small businesses. So everything we do is supposed to be and is about supporting small business owners. Everything from our programs through SBIR, STTR, to our centers, to our funding opportunities. So I would encourage folks to take advantage of everything that SBA has to offer. And I think, quite frankly, not enough communities do across the board. And so, again, this starts with being connected to one of our resource centers who can walk you through what these programs are, how they work, and how you can become competitive and apply for them.
Thank you for that. So just going to go into some general questions for all of the panelists. So say I go through the program, whether it's on the platform of Republic, or I get a line of credit from Chase, or I go through an SBA program, and ultimately it fails. As an entrepreneur, what are some ways that you would recommend to manage failure?
And my question is, what fails? The program fails, or the business fails?
The business.
I mean, again, I came to this role as an appointee from entrepreneurship. And here's the truth of entrepreneurship. It is the hardest thing you will do, but it is the most rewarding thing that you will do. And one of the things that small business owners have to be prepared to engage with is the idea of failure. They have to be comfortable with it, and they have to be capable of pivoting quickly. And if anything, we saw during the pandemic, businesses across the board had to completely re-identify how they were going to provide their services to their customers. And so, for me, I asked that question about who failed. I don't know that I would even say it was a failure. I would say they went through a program and they learned what didn't work. And so they would come back and do something different. But failure would really just be continuing to do the same thing and expecting that any one of the organizations that are on this call would have a different outcome for you just because you screamed louder or you showed up every day with the same exact circumstance. So we have to ask entrepreneurs. We always have to be able to pivot. We always have to be able to be comfortable with failure. And we have to always think about new revenue streams for our small business, because we want to be able to make sure that we can survive and weather any storm.
Thank you for that. And Robert, in your world, oh, sorry, Caitlin, go ahead.
Yeah, I was saying, I'm sorry, Caitlin, go ahead. I'm sorry.
No, pardon. So I would agree with Natalie. I think that when I think of founders who are dealing with failure, I think two of the best characteristics is, being able to be dynamic and also resilient. I think anyone who is operating within the startup ecosystem realizes how difficult it is to really get a startup off the ground. And even, when you enter a later stage, it's not always promised that everything's going to work out. I think if you can take challenges, and I've seen this so much, like over COVID with founders, being able to pivot your business model and really take into account all different things that can happen, that's important. And if it is the case that a founder fails, I think resiliency is very important to exercise. It is not uncommon, nor is it looked down upon if a founder has had a few different operations under their belt. Even if it didn't end up working out, I think that oftentimes it can be a signal that this founder has been able to build up their tool belt. And of course, if you can see that they've been able to like iterate on their past ideas and build off of that as well, you can almost have more confidence of that they'll know how to weather challenges when they come up just because of the fact that they've done it before. So I think that when it comes to the startup ecosystem, everyone should be pretty aware that it is, unfortunately not uncommon to face failure, but it doesn't necessarily mean that you should give up. And definitely not to be embarrassed or deterred by it because, a lot of peers, in the same space have gone through the same thing before.
Definitely. And Robert, in your world, failure might look like not being able to pay back this loan that I got from Chase. So can you talk about how you have a story of an entrepreneur coming back from a failure? What does that look like managing failure when you have a banking relationship on the line?
Sure. I think both Caitlin and Natalie hit some key points, specifically around failure, right? For entrepreneurs. And, like Natalie, I was an entrepreneur for 10 years myself before I came into this role. And, what I found is I never failed, right? I always learned. And again, it's mindset. Part of what we try to do as a partner is we really try to help you think through that, right? And create the plan first. Because if the plan has some real substance around it, it decreases the chances of failure. Statistically speaking, and this is something most people probably know, but really never think about, the number one reason businesses fail is not because of lack of capital. It's just because it's a bad idea, or it may not be the best idea at that time. So it's really around research and gaining an appreciation for what you're getting into and when. From the bank's perspective, it's part of the reason lending is so difficult, right? I describe it as a process that fits inside of a system. And the process is really understanding the financial components necessary to tell your company's story. So that's what your tax returns are. That's what your income statement is. That's what your balance statement is. Those are all the components that tell the story. And it tells a story to the system, which is the underwriting process, where you have an objective person looking at these numbers, and these numbers tell whether or not this donut shop or this retail location or this law firm is a good risk. So for us, it's really monitoring this every year. So as a lender, we monitor your progress from a financial standpoint. So we'll ask you to submit documentation for review. And what we're looking for are trends. And if we see something that's troublesome, we'll be reaching out and having a conversation with you around what's your strategy and what you're doing. So again, it speaks more to the partnership piece than it does just the third-party objective lender.
Thank you for that. So we're going to have some audience questions come in right now. So we have a question from Sean, and he's asking, what is the success rate for crowdfunding? So that's for Caitlin.
Yeah, it really depends on what platforms you're looking at. In terms of success rate on Republic, I said earlier, it's about 95% of companies that are able to close funds successfully on our platform. But with that, keeping that in mind, that our goals that founders set are quite broad. I'd put our average campaign size on the platform at about $500,000. Not necessarily using that number to deter anyone, but keeping in mind the fact that we're raising with pre-seed all the way up to Series A companies. So overall, through Reg CF, you're able to raise up to $5 million. But there's a lot of founders who come onto the platform who are looking for a few $100,000 rather than that $5 million mark. So kind of just depends at what your needs are as a company and what you're looking at, what stage you're in, things like that.
Great. So we're quickly coming down on time, but just wanted to get some insight from all of you. So if you could all give advice to our entrepreneurs, our attendees here, what is one piece of advice that you would give them as they look forward to raising capital or partnering with the SBA or opening a bank relationship with Chase?
I'll go and say you can never fail if you don't stop trying. And in the space of entrepreneurship, you're going to need to find ways to continue to motivate yourself. You are definitely going to go through different valleys and peaks personally and professionally. And your ability to stay calm in all of those circumstances is going to be a huge saving grace to you, which means that it's important for you to take care of your physical and mental health during the process of being an entrepreneur. And that is going to be one of the greatest assets you have, which is you and yourself staying healthy. And then, the other thing is that you should always show up to the workshop, show up to the conference, show up to the informational session, show up for yourself and learn about these programs. It's no one else's real obligation to do this for you. If you're serious about what you want to do, the information is there and you have to look for it and then show up for it. And keep showing up for it, even if it doesn't work out for you the first time. So that would be, my personal Natalie Cofield entrepreneur advice. My Natalie Cofield, the assistant administrator at SBA advice would be to make sure you connect with one of our resource partners so that you're not going it alone.
Definitely. Thank you for that, Natalie. Caitlin?
Yeah, definitely. So, whenever I'm chatting to founders about fundraising, I think one important thing that I really like to identify, when a question of how to approach fundraising and just tips comes up, is the fact that throughout all different stages, there's going to be investors that are best fit, different programs, grants, or loans that they should be looking at. I think it's really identifying at each stage what the best structure or resource of capital will look like. Oftentimes, I will see companies, maybe chasing VCs or different types of funding that aren't necessarily built out for the stage of company that they're in. And sometimes it can become a deterrent because they, are not getting the same results as they'd like, and they're not using their time as productively, maybe facing a lot of rejection just because they're looking in the wrong place. So I think it's really important to be educated on where you should be looking for the stage of your company and focusing all of your time and effort towards those resources. So maybe that means if you're a seed stage startup, not necessarily looking to later stage VCs or investors, but rather looking at angels who are strategically placed in your area and have a large focus there. And so kind of honing in on who exactly and where exactly is the best place to fund your company at that stage. And then kind of going off of what Natalie was doing in terms of personal advice that I would give just from my playbook and the experiences that I have, is to never hesitate to ask questions. I think that throughout all of our life, we've all been positioned or in positions of maybe, not feeling comfortable because we feel like we're supposed to know something, but really not understanding it and telling ourselves of like, hey, I'm just going to go try to figure this out personally. To another person, I don't think they would ever mind explaining something and taking a few minutes out of their day to do so and saving you the hours of like trying to figure it out yourself, and also the uncertainty of knowing whether or not the information you're seeking for, like where you're seeking it, is incorrect. And I think it's very important to recognize, like, everyone has different strengths, and as a founder, your strength might be building or doing this, and you don't have to know everything about fundraising. And so like you need to use your resources, and everyone who is a capital allocator and helps founders fundraise, truly I would say is passionate about entrepreneurship, and we all have, an immense respect for the people who are building their companies. So don't ever be worried to ask a question. And, to us, it's something that we know pretty deeply. So we should be able to give a quick explanation on whatever that may be if it's within our field. So, just ask the question and don't hesitate.
Thank you for that, Caitlin. Robert, quickly, a piece of advice.
Yeah, for me, it's simple, and it's almost leveraging what both Natalie and Caitlin has said already, but don't do it alone. Build a team of trusted advisors around you. They will support you and help you grow. And you need to be intentional about building these relationships. If 2020 taught us anything, I know that we learned a difference between a business in survival mode and a business in sustainability mode. And those businesses that operated in sustainability mode had relationships. They had relationships at banks where they could access PPP. They had a relationship with the SBA where they could go and find out more about EIDL loans. They had a relationship with funders. They were aware of people like Caitlin and Republic. Build relationships. This is not about accepting the new normal. This is a paradigm shift. And if your mind doesn't acclimate to that, you're going to experience the same thing you've experienced before. So position yourself for growth.
Definitely. So thank you. We've come to the end of this panel, other sources of capital. So we just want to thank Caitlin, Robert, and Natalie for being with us here today and for answering these questions. I know our audience has definitely learned a lot, and as have I. So just a big thank you for being here.